recent example, the three assets that we just acquired in Azusa. Those had gone to market, and once it goes to market and it turns into an auction, we're not buyers. Always throughout the history of Paladin, avoided competition and pursued strategies that have barriers to entry, particularly to institutional capital, so that we end up being at a competitive advantage with institutional backing in what has been traditionally a mom and pop kind of space. So we found out, and we probably weren't the only firm that found out, but we found out that the buyer was bailing on the transaction. And I got a call from the broker the day after Christmas saying the deal's broken apart, the buyer's not buying it. It was an exchange buyer, and their 1031 fell through, so their acquisition fell through. And we were told, you have 2 weeks to look at it before it gets on LoopNet and I take it back to the market. And we had it under contract in less than 2 weeks because we had already thoroughly underwritten it. We've been staying abreast of the market. So that little nugget of information that there was a buying opportunity if we put a competitive offer together. So broker still has a fiduciary duty to the seller. I happen to know the seller, which is a rarity in this marketplace. It happened to be an individual, a sophisticated player, but not in the multifamily space. This was sort of an accidental investment that they had made. Also, it kind of stumbled into their lap, but their main focus was on commercial real estate, not on residential, and they had ridden the market up, and it just made sense for the partnerships that they had formed to exit. And they wanted, at that point, really certainty of close because they had loans coming due, they had postponed refinancing, and so they really wanted a strong buyer. They wanted a fair price, but they valued certainty of close quite highly. And I think that's one of the things what sets Paladin apart. We've invested in $6 billion of real estate with institutional backing over 30 years. We have the reputation for doing the right thing and treating people fairly and honestly and transparently. That reflects in how we interact with the brokerage community. And so we have a reputation for when we put something under contract, we don't retrade the price unless some unforeseen condition has arisen, and then we'll sit down and come up with a practical solution to it with the seller. We close what we put under contract, and we protect the brokers who bring us transactions, and that's important. So I think all of that fits under the corporate value of integrity and do the right thing and treat people fairly and honestly and transparently. And so we were able to tie up this asset before it went to the market at what I think was a fair price for both sides. They might have been able to get a higher price had they taken it to auction, but they wouldn't have had the certainty of close that they had with Paladin. And it helped that I knew the seller, and we all got on the phone together and kind of looked each other in the eyes. And he wanted to validate the trust that he kind of sensed was already there given our relationship, but he needed to communicate, Fred, this is important. I need to close this transaction. And I said, we do too.